Let me start the proceedings of this event. I'm Poonam Gupta, Director General of NCAER, National Council for Applied Economic Research. It is indeed my great pleasure and privilege to welcome you all on behalf of the Ministry of Finance to this interaction today with Honorable Finance Minister Ms. Nirmala Sitharaman and the US Treasury Secretary Dr. Janet Yellen. Let me take a couple of minutes to introduce them and to welcome them to this event today. But before that, a very small housekeeping issue. May I request you all to kindly put your electronic devices into silent mode if they are not already. Please take a moment to do that. So let me start by introducing our eminent guest, Dr. Janet Yellen. Dr. Yellen was sworn in as the 78th Secretary of the Treasury of the United States on January 26, 2021. She took office after almost 50 years in academia and public service. She is the first person in American history to have led the White House Council of Economic Advisors, the Federal Reserve, and now the Treasury Department. She is also Professor Emeritus at the University of California at Berkeley and is a renowned scholar on macroeconomics and labor markets. Secretary Yellen has served as the President of the American Economic Association in 2021. She has also been a founding member of the Climate Leadership Council. On December 1, 2020, then President-elect Biden, while nominating Dr. Janet Yellen to the post of Treasury Secretary, noted, within quotes, she has spent her career focused on unemployment and the dignity of work. She understands what it means to people and their communities when they have good, decent jobs. With that, welcome Dr. Yellen.
Thank you.
Let me now take the opportunity to introduce Honorable Finance Minister Ms. Nirmala Sitharaman. Ma'am completed her bachelor's from Sita Lakshmi Ramaswamy College and her master's in economics from Jawaharlal Nehru University. After submitting her doctoral thesis, she moved to London, where she worked as the senior manager in research and analysis in Price Waterhouse. She returned to India in 1992 and established the Center for Public Policy Studies in Hyderabad. In 1997, Ms. Sitharaman established a school, Pranav, that won accolades for its unconventional approach to education, prioritizing a child's inherent talent over the conventional learning systems. From 2003 to 2005, Ma'am served as a member of the National Commission for Women. In 2008, she became a member of the BJP's National Executive. In 2014, Minister Sitharaman was inducted into the Council of Ministers and held the charge of Minister of State for Commerce and Industry. In May 2016, Ms. Sitharaman successfully contested the Rajya Sabha election from Karnataka. In September 2017, she became the first full-time Women Defense Minister of India. In 2019, Ms. Sitharaman became the Finance and Corporate Affairs Minister of India. Welcome to you, ma'am. Now, it is quite evident, even from their brief bios, that Secretary Yellen and Minister Sitharaman are iconic women leaders, trailblazers, and eminent inspirations of our time. I would like to take this opportunity to thank them for their leadership on behalf of all the women present here, but also men, and elsewhere in the world. So thank you, ma'am.
Thank you.
I would like to now invite Secretary Yellen to deliver her opening remarks. Thank you.
Thank you so much for that introduction, and it's great to be here with all of you. Let me first express my thanks to Minister Sitharaman. I'm grateful for her warm welcome, and I'm appreciative of her partnership on a broad range of important issues over the past 2 years. I'm thrilled to be back in India. During this trip, I've been reminded of the dynamism of the Indian people. The leaders gathered here today are an example of the vitality that makes India one of the fastest growing major economies in the world. It's also been inspiring to witness how Americans and Indians are working together to strengthen our ties and drive economic growth for both of our countries. We're meeting today at a moment where we see significant challenges for the global economy. The pandemic continues to exert a drag on economies across the globe. Putin's brutal war has claimed countless Ukrainian lives and livelihoods, and it's also exacerbated food and energy insecurity across the world. And climate change continues to devastate communities with greater severity and frequency. As President Biden said earlier this year, India is an indispensable partner to the United States, and that's particularly true today. I believe that these urgent challenges are bringing India and the United States closer together than ever before. Our partnership is especially crucial as India prepares to assume the G20 presidency. Over the next year, we look forward to supporting India's presidency and making progress on our shared global priorities. But today I want to focus on our own bilateral economic relationship. I believe that we should strengthen trade and investment between India and the United States. Deepening our bilateral ties will reap significant economic benefits for both of our nations. At a time of global turmoil, I also believe that it will bolster our country's resilience and national security. The economic ties between the U.S. and India are stronger than ever before. As you know, the United States is India's biggest trading partner, and our bilateral trade recently reached an all-time high of over $150 billion in 2021. Direct investment from India in my country supported over 70,000 jobs at the end of 2020. A broad range of American companies from Whirlpool to Boeing to GE invest in India. And Indian technology firms like Infosys and Mindtree are critical to the day-to-day operations of many American corporations. Our close ties extend to the next generation. We're grateful that 200,000 Indians are studying in America and enriching our schools and universities. As many of you know, our strong educational and research collaboration will lay the groundwork for future economic growth. Our relationship has not only withstood, but thrived at a time of global volatility. And that's no surprise. Our countries share an economic dynamism that's tied to our democratic traditions, one that values new ideas while providing stability and predictability through the rule of law. As we look to the future, I believe that the recent disruptions caused by the pandemic and Russia's war are a reason to further deepen our economic ties. India is one of our trusted trading partners. In a world where supply chain vulnerabilities can impose heavy costs, we believe it's important to strengthen our trade ties with India and the large number of countries that share our approach to economic relations. and this includes both developing and advanced economies. Our goal is to vigorously promote global economic integration while creating greater redundancies in our supply chain to mitigate concentration risks. We also want to diversify away from risky countries like Russia that seek to weaponize trade integration to advance their geopolitical aims. And we call this strategy friendshoring. Modernizing our trade relationships in this way will pay dividends. Increased trade between our two countries can result in economic benefits for our people. It will also provide greater reliability and certainty for consumers and businesses on key goods and inputs. As Prime Minister Modi said, resilient trade in the 21st century requires trust, transparency, and timeliness. And deepening our integration will serve all three of these goals. We're already seeing new supply chains develop in India. This includes manufacturing investments by American companies. Apple and Google have both announced plans to expand phone production in India. Hasbro, an American toy conglomerate, began shifting manufacturing from China to India and Vietnam in 2019, and it plans to continue doing so. We will continue to build business and commercial ties through meetings like the U.S.-India Commercial Dialogue and CEO Forum. Further, our government is partnering with India to grow local industries and connect them to global supply chains. We believe our investments will benefit both countries. For example, the U.S. International Development Finance Corporation has a very active portfolio in India, investing in projects from microfinance to renewable energy. Last year, it approved up to $500 million in debt financing for America's largest solar manufacturer to build a solar module production in Tamil Nadu. The loan is the largest single debt financing transaction in the institution's history. And once finished, the facility will strengthen global supply chains by diversifying solar panel production. At the same time, it will support Prime Minister Modi's renewable energy ambitions. As we bolster our relationship, we can do so in a way that sets the standard for innovation and cooperation in the 21st century. Earlier this year, India and a dozen other economies joined the United States in establishing the Indo-Pacific Economic Framework. The Indo-Pacific region is projected to be the largest contributor to global growth over the next few decades. The countries in this framework will help write rules for our new economy. In all, I believe that the current moment, difficult as it is, will bring our countries even closer together. We have much to gain for our economies as well as for our resilience and national security. All of us in this room have a critical role to play. We look forward to working with government, industry, and civil society leaders as we deepen the relationship between our two countries. Thank you.
Thank you very much, Secretary Yellen. May I now invite Honorable Minister Sitharaman to deliver her remarks.
Good evening, and it's my pleasure to be here hosting Secretary Yellen and her delegation. At the outset, I would like to extend a warm welcome again to my US counterpart, US Treasury Secretary Janet Yellen, the official delegation accompanying her, and my dear delegates from business and think tanks. On the sidelines of the 9th Economic and Financial Partnership, this event on India-US business economic opportunities is being held, bringing prominent delegates together from business as well as economic think tanks under one roof. The audience in this room, their activities and contributions across research and business are fundamental to India-US financial and economic relationship, and I'm pleased to welcome all of you. India-US bilateral relations have developed into a global strategic partnership through 50+ bilateral dialogue mechanisms. Our cooperation is broad-based and it is multi-sectoral. The strength of India-US relationship lies in mutual understanding of each one's necessities and respecting the differences. A testament to our deepening economic and business relations is that bilateral trade in goods between the two countries crossed the 100 billion US dollar mark in 2021, making it the largest volume of goods trade in the India-US economic history. It is worth noting that the bilateral defense trade between India and the US has reached more than 20 billion US dollars from near zero about 12 years ago. As our defense partnership evolves, our defense industry welcomes opportunities for collaboration, especially to innovate, co-develop and co-produce for India and the world. India and the United States have time and again exhibited shared appreciation for mutual collaboration on a host of multilateral fora. In 2021, the United States joined the International Solar Alliance headquartered in India. With collaborations at such global forums and the current special mechanisms such as the 2+2 and the plurilateral forums like Quadrilateral Security Dialogue, the Quad, Indo-Pacific Economic Framework, the IPEF, and the I2U2, India, Israel, and the UAE and the US. In place, I envisage a much deeper and dynamic collaboration across business and economic research, particularly in economic policy research. At this point, allow me, therefore, to highlight certain key aspects of the India growth story that are poised to act as enablers for a more resilient, robust, and rewarding economic engagement between India and the US. You're all aware that the global economic outlook remains challenging. According to the latest World Economic Outlook of the IMF, as published on 11th October 2022, global economic activity is experiencing a broad-based and a sharper than expected slowdown, with inflation higher than in several decades. The Indian economy is not insulated from the impact of global developments. However, India has carved out its own growth trajectory, supported by the strong above-normal southwest monsoon, public investments, and strong corporate balance sheets, upbeat consumer and business confidence, and receding threat of the pandemic. India has emerged as one of the fastest growing major economies in the world. It has recently surpassed the UK to become the 5th largest economy in the world and is expected to be one of the top 3 economic powers globally over the next 10 to 15 years. Key structural reforms that we have undertaken are worth mentioning. This resilience of India is not a stroke of luck. Therefore, instead it has manifested from a conscious approach of pursuing and pushing structural reforms, believing in the spirit of Atmanirbhar Bharat, and adopting an agile and calibrated policy approach. The critical structural reforms include several, but I'll mention a few. The National Infrastructure Pipeline in 2019 and the National Monetization Pipeline in 2021 have created a strong baseline for infrastructure creation and development. The NIP was launched with a projected infrastructure investment of about 111 lakh crores, which is 1.5 trillion US dollars, and has expanded to over 9,000 projects now. Moreover, the PM Gati Shakti program, which is a coordinated approach to taking infrastructure forward with a greater speed, has been launched to bring a master planning approach to infrastructure building. The production-linked incentive scheme across various sectors has been put in place to bolster the manufacturing sector's competitiveness. This vision of Atmanirbhar Bharat, in particular for the electronics and semiconductors, was given momentum with the approval of the India Semiconductor Mission in 2021, with a total outlay of 76,000 crores of Indian rupees, which is about slightly over 10 billion US dollars. This is expected to pave the way for India's growing presence in the global electronics value chain. We recognize foreign capital inflows as a vital component of India's growth story. Key reforms include simplification and rationalization of the foreign portfolio investor regulations, increase in aggregate foreign investment limit, introduction of common application forms for registration of FPIs, and opening of new channels of debt investments like the voluntary retention route and fully accessible route. The success of these measures is reflected in the sustained investment flows entering India through the FPI route. Significantly, the US is the top source country for FPI investments in India, with the asset under custody of the FPIs from the USA standing close to 234 billion US dollars as on September 30th, 2022. An exciting opportunity awaits US investors in the form of India's maiden international financial center, the GIFT IFSC, with a unified regulator, the International Financial Services Sector Authority, is a path-breaking initiative of the Government of India and is fast emerging as a preferred destination for global financial services institutions. GIFT IFSC not only offers world-class regulations and state-of-the-art infrastructure, but also a rare opportunity to explore innovative and experimental financial products and services such as aircraft leasing and bullion trading. I'm also pleased to note that while Bank of America was the first global bank to establish global in-house center at the GIFT IFSC, this year it has also decided to expand its operations there in the GIFT Center. Moreover, JP Morgan Chase Bank also received its IFSC banking unit license from the IFSCA this year. India's digital prowess will define India's growth and development in the next decade, medium and long term. India has built an entirely new digital economy by leveraging the foundations of over 1 billion bank accounts, 1 billion mobile phones, and 1 billion digital identities. We've been talking this subject in great detail with a presentation done by Secretary Economic Affairs before the Secretary Yellen and her delegation. Today, we have a powerful story on digital public goods to tell the world. The economy is seeing an exponential increase in new age fintech firms. India has the highest fintech adoption rate as compared to the global average. I'm happy to note that the Indian technology industry in the US has played a significant role in expanding the talent pool outside the traditional tech hubs states. This has contributed to some of these states, such as North Carolina, becoming emergent tech hubs. The Indian tech industry directly, by supporting the US client base, supported close to 1.6 million jobs and contributed to approximately 198 billion US dollars to the US economy. What I have tried to outline above in this intervention is the sum and substance of the promise of India's continued resilience, its ongoing growth story, and the multitude of opportunities that India offers in times to come. Capitalizing on the same, what I envisage and envision is a much deeper, broad-based, and mutually beneficial collaboration between the two countries. I invite and call upon all of you, the stalwarts of business and prominent thought leaders, to participate in and to contribute to this vision of shared prosperity of India and the US. Thank you very much.
Thank you very much, Honorable Minister. Secretary Yellen and Honorable Minister Sitharaman have been very kind with their time. They have given us a few minutes to ask some questions. But being respectful of their time, we are trying to be very disciplined and prepared. Many of you actually were asked to submit your questions in advance, and these have been curated so that we are not repeating ourselves. Some of these questions I've been asked to pose. For other questions, you have been informed if I'll call upon you. So please bear with me as I proceed with the Q&A. The first question goes to the fellow women economists in the room. And let me name them: Farzana Afridi, Pamidua, Ila Patnaik, and Shamika Ravi. The question is about the current global context, and it's both for Secretary Yellen and Honorable Minister Sitharaman. The question is, in the current global context, what are your thoughts on the economic outlook, present and going forward, for the US and for India? And perhaps Secretary Yellen can go first, and then Honorable Minister can answer the same question.
So you asked about the global outlook, and I would have to say that I think the global outlook at present is challenging, in part because high inflation is a problem that many advanced and developing economies face in common, and central banks, first and foremost, are trying to deal with these problems. In part, high inflation reflects spillovers of Russia's brutal war in Ukraine, which has boosted energy prices and food prices. And for many emerging market countries that already found themselves with high debt burdens, higher interest rates, and the costs of meeting higher energy and food costs is leading to unsustainable debt loads. So I think that's something that we will have to deal with going forward, is figuring out a way to relieve those debt burdens. As far as the United States is concerned, that while we suffer from high inflation, we have almost the strongest labor market. We recovered very rapidly, had the fiscal space to respond to the labor market damage caused by the pandemic, and now have about the strongest labor market that we've seen in 50 years. And households and businesses are really quite strong financially. And so they've proven very resilient in the face of very significant shocks. But much of the world, I think, faces a downturn because of global forces that we're facing.
Thank you, ma'am.
While there are comparable challenges as mentioned by Secretary Yellen, I think in India the inflation challenge is largely prompted by the external challenges. So whilst the number today is in a manageable range, the challenges I foresee are largely due to the import of crude, which is almost like 85% of all that we consume is imported. And as a result, the volatility in the energy market is going to affect India, and that is one thing which we keenly watch. So the external factors causing a stress on Indian inflation is something which we'll have to be mindful of, on which both the Ministry of Finance and the Reserve Bank of India are working together. The second and major challenge which I see is, even as we speak on demographic dividend, a growing middle income bracket people, middle class India that is, demand is definitely going to be coming from that aspirational class. But for also the support that the government is giving for sunrise sector and drawing investments for sunrise sectors, giving incentive for sunrise sectors, we need to have our youth trained and skilled for meeting the challenges of the jobs which demand high-end training. So skilling will be my second challenge, which is skilling in that scale, skilling for those sectors which need that kind of a technology awareness, and skilling also to be done speedily. It has to be like tomorrow. So I have a challenge which I'll have to face and make sure that the Indian youth get the required training to be able to meet the expectations of those investments which are happening in the sunrise sector, particularly at a time when emerging market ex-China is the language with which investments are coming in. That will be the second challenge. And the third one is, if we have already set ourselves to a course of reaching the developed country status by 2047, that is when India is at 100 years of independence, it means the next 25 years will have to be at a pace both for investment and for production, quality productivity. These are fairly abstract as we speak, but absolutely issues which have to be well understood in all its nuances, and make sure that we are able to address these in the short term so that they can bear the results in the medium term.
Thank you, ma'am. The next question is for our Honorable Finance Minister. It's from Mr. Baba Kalyani, Chairman and MD, Bharat Forge Company. Mr. Kalyani, yes, please.
Honorable Finance Minister, Mrs. Nirmala Sitharaman, Madam Secretary, Treasury Yellen. My question is on India's infrastructure financing needs. And I would just like to elaborate this with a half-a-minute explanation. As both of you have said, there is no better time than today for India and United States to forge a greater economic and trade partnership. Just on the 9th of November, we had the India-US CEO Forum meeting, where this was echoed by Secretary Raimondo, our Minister Goyal, and our US business colleagues, where they talked about the trade of $100 billion going to almost $500 billion in the next few years. Now, with the strong political leadership and clear vision for accelerated economic growth offered by our Honorable Prime Minister, coupled with the structural reforms that the Honorable Finance Minister laid out, India is targeting to get to something like $30 trillion by 2047, which is the 100th year of India's independence. Now, this requires huge investments in infrastructure and large investments in creating the necessary climate goal actions that are required. And we have to look at the United States and its financing arms to see how we could get these big investments.
question is for you, ma'am.
Thank you, and I'm glad that this question comes from a veteran business leader and also somebody who has pioneered for Secretary Yellen's information's sake, pioneered defense production in India. He's one of those leading manufacturers of some of the top-notch technology for defense equipments. And therefore, his interest in investment really sort of is appreciable. I would briefly, I did mention in my opening statement the national infrastructure pipeline, the national monetization, asset monetization pipeline, all of which was expected to supplement one another so that India's investment platform, if I may call that, is widened and made energetic. And I'm glad to say that the monetization activity is going at full speed. So investment from our side for those 9,000 odd projects which are in the pipeline are absolutely on course. The way in which we've opened up for the FDIs and FPIs is something which briefly I've mentioned in my opening remarks. An ecosystem for investment in India, favorable investment returns from India are all being worked with consultation with the industry. And industry and their joint venture partners have also given us a lot of inputs. So I would think, especially when now we are talking about emerging markets ex-China, it's no longer China plus, it is more like India, which gets majority of the investments which are coming from all these global large investment companies. I've had few conversations in the recent past. So in the presence of Secretary Yellen, I would think if there is a broad guidance for businesses, for investors, and for technology leaders to look at India favorably, because you have a plethora of leaders, all of whom have contributed towards the US, as I said, in terms of investment, in terms of job creation. It is time that the global value chains are strengthened by having those investments come to India, because we are continuously engaging with the US administration. And most of our business leaders also do business in the US. So it is not as if you're going to completely outsource your businesses to India, but locating it here, you get good skilled manpower, cost effective. The labor costs are still competitive in India when compared to many others. So this is the time, I would think, concrete plans to have a guidance given for businesses to come to India without hesitation, to transfer certain technologies to joint venture partners so that they can do such businesses where you wouldn't have any sense of insecurity, if I can use, for want of a better word, I'm using insecurity, on technology and technology related issues. So this would be better time for investments to come into India as policy is designed with the industry consulting with us. Thank you.
Thank you, ma'am. The next question is for Secretary Yellen, and I'm going to read this question out. Ma'am, how can the US and India partner in support of India's development and infrastructure goals? It's a continuation of the first question. So let me read out again. How can the US and India partner in support of India's development and infrastructure goals?
Well, I think in a broad range of investments that will improve the resilience of supply chains. I would agree with the comments that you just made, that there are tremendous synergies between our countries, and foreign investment, direct investment going in both directions is this is really a welcoming environment for that. But more broadly, I think with respect to a range of investments, an example would be investments in clean energy, climate change. I think we need to look to the multilateral development banks to play an important role in facilitating those investments in India and in many emerging markets. And we know that, for example, in dealing with climate change, that the necessary investments are going to be massive in scale. And public funding or the resources of the multilateral development banks on their own will not be sufficient to address the scope of investments that are required. So we see mobilizing private capital as an essential part of being able to make investments to address clean energy, climate change on the scale that are required to meet our climate commitments. And we're looking and hope to partner with you and work with you, especially during your G20 presidency, to rethink the role of the World Bank and the other multilateral development banks. We see it as appropriate that concessional finance should be available to India and other countries to make climate-related investments that have positive spillovers to the entire globe. And we think there's much more that the multilateral development banks can do to bring in private capital to encourage those investments. So we hope to work together on that program.
Thank you. The next question is from Mr. Ashu Kula from Citi, and the question is for Secretary Yellen.
Secretary Yellen, you recently reiterated the need for the US and its trusted trading partners to work together in strengthening the global supply chains via friendshoring. And my question would be, given the close relationship between the US and India, how do you see the friendshoring play out in the coming years? And within that, would there be certain specific sectors where India could play a bigger role? And I have a follow-on question for the Finance Minister, but I could ask after you answer.
Well, yeah. So thank you for that question. Friendshoring is really our approach to advancing trade that's free, fair, and secure. We have seen how vulnerable our supply chains are in recent years. First, during the pandemic, when we suffered from shortages not only of PPE, but semiconductors and other goods. And then more recently, as we have seen Russia weaponize its control over natural gas and other commodities that have had such a devastating impact on so many countries around the world. So friendshoring is a way that we see to improve the resilience of our supply chains in ways that are free, fair, and secure. We do see the importance of a different approach to supply chains. American firms have been focused on efficiency and lowering the cost of supply chains, but we think we need more of a focus on resilience and considering the problems that stem from undue concentration of supply chains in one geographical region. I mean, for example, right now, the most advanced semiconductors are produced in exactly one Asian country, which I think presents considerable economic and national security risks. So in thinking about the security of supply chains, we want to make sure that we don't only look to ourselves to supply our needs, but maintain the benefits of a multilateral approach, the benefits of trade, including in thinking about our supply chains, countries, both developed countries, advanced countries, and developing countries that rely on one another in trusted relationships to build those supply chains. I would see for India opportunities in clean energy, for example, solar, where I mentioned that our development finance institution is providing the largest ever investment that they've made in a solar manufacturer to produce a facility here in India. And I think there are other supply chain areas where also we could work together to improve resilience. I was this morning in Microsoft India Development Center and saw ways in which American companies have invested in India and vice versa. And I think these partnerships will pay off for both our countries and for the globe more generally.
Thank you. Mr. Kula, let me come back to you towards the end if I have some time left. For now, we have a question from Mr. Sanjeev Mehta, CEO and Managing Director, Hindustan Unilever Limited, and the question is for our Honorable Finance Minister.
Good afternoon. Madam, there is a close connect and relationship between the US and Indian financial markets, and we are natural partners. You highlighted in your speech that US is the top source for FPI in the country, with assets under custody now crossing the 230 billion mark. So two intertwined questions, Madam. One is, what are the factors which have gone behind deepening of this transformational relationship? And going forward, why should the US investors bet on India?
I think in the recent past, quite a lot of observations of India watchers from outside India, and also multilateral institutions which are looking at Indian economy have answered your second question as to why should investors look at India. Just a few points from there which I'm happy that they've noticed, and I'm happy that it is registering that India has gone through a very interesting phase of reforms, undeterred reforms, and reforms of such nature which would require so much of political commitments which our government has shown. And also the fact that India has a policy stability, a government which is voted in and is showing stability in policy, have all been features, I suppose, in attracting investors towards India. The global developments have only added to the situation where India is seen a lot more as a stable and good partner. Also because investments in India do give them good returns. So what more would you say for big league investors? Other than the fact that we are providing stability in policy, stability in taxation, persistently carrying forward reforms. One other thing is also that for many pension funds, sovereign funds, we've also extended a lot of fiscal benefits, taxation concessions. So I'm happy that these are being noticed, and in fact not just noticed, you can see investments coming with a lot of hope about India. If that is on the broad features about what attracts investors to India, I think it's important to give credit to the people of India who have persisted their revival, economic revival agenda post-pandemic. They have absolutely kept the momentum on revival, and you can see where India is as a result of that kind of Indians wanting to come and show their entrepreneurial skills. The policies of the government have only but helped this process, and it shall continue because the Prime Minister has constantly engaged with different sectors understanding their problems and giving targeted assistance where required and giving policy comfort as well. So I suppose I've addressed both your questions.
Thank you, ma'am. The next question is for Secretary Yellen, and it's from Mr. Nikhil Sahani from MasterCard.
Good evening. Our chair.
Yes.
So global cooperation to regulate cryptocurrencies is key as no single country can regulate them in a silo. Do you have an update, Secretary Yellen, on how this is progressing in the US?
I'm sorry, did you say cryptocurrencies?
Yes, Secretary Yellen.
Yeah. Well, this has been a tremendous focus of the Biden-Harris administration. And I think we've made a good deal of progress in at least dealing with issues of illicit finance in connection with cryptocurrencies in the United States. I think we have a ways to go and holes in our regulatory environment more broadly. Under my leadership, the President's Working Group on Financial Markets issued a report on stable coins, discussing the risks that they pose to financial stability in the United States, and clearly we need a regulatory framework there. And with respect to cryptocurrencies, there are some holes where we have inadequate market, consumer, and investor protection issues that need to be dealt with. But this is an area, and we had some discussion of this in our meetings today, where international cooperation is really important among public authorities, the private sector, and other stakeholders. We need high regulatory standards globally. We need to take steps to reduce the cost of cross-border payments, and we're very actively working within the context of the Financial Stability Board, the Financial Action Task Force, the multilateral development banks, the IMF, and bilateral exchanges to really address on a global basis the risks and some of the benefits from cryptocurrencies, but we have an active agenda in the year ahead.
Thank you, ma'am. I'm going to invite Mr. Sandeep Somani, Managing Director, Somani Impresa Group, to ask the next question, which is for our Honorable Finance Minister. I'm also making a request to the timekeepers to give me a cue. I have 3 more questions. Just quietly come and tell me how we are doing on the time. Mr. Sandeep Somani.
Finance Minister, good afternoon. Under the dynamic leadership of Prime Minister Modi, India has continued to attract record FDI, rising from 44 billion to 84 billion between 19 and 22. Even though the world in 2 of these 3 years was in a 100-year pandemic. So my compliments to the government on being very proactive. Now, on the list of FDI nations, US is number 2. Inward remittance from the US is number 2 as far as our partner countries go. And also on the list of the outward investment from India, US is number 2. Maybe you would like to highlight, Honorable Finance Minister, the various steps the government has taken to create an even more enabling environment to attract this FDI, as also your outlook for FDI over the next 2-3 years. Thank you.
Well, thank you for this question, and also for your observation that FDI is coming into India even during the pandemic, years of the pandemic and the lockdown and so on. It is true, and that momentum continues even in the last few months, well after the recovery is reaching the pre-pandemic levels. In many sectors, we have already exceeded the pre-pandemic levels. 2 things which will continue this momentum is my observation. One, the continued interest of this government and commitment of this government towards carrying forward the reform agenda, opening up the economy and making sure the interest of the large Indian middle class, which has the purchasing power in their hands, so that globally valued goods are produced in India, for India, and also for producing for the world. So we are fashioning our own formulation in that we support investments for these sunrise sector producers, because they are the ones in which India has a lead advantage in the name of the technology and also the youth who have the capacity and the skill to produce. So consistency in policy, which I've already mentioned before, the desire and the commitment for continuing the reforms, and also the path which has already been set that the next 25 years will be absolutely critical for India to draw investments, to make India a better place for doing business, and also for ensuring that for technology and technology-related activities, India's youth in the form of startups and the innovations which are happening, and the reforms which are being taken up for ease of innovation, patent, and other registrations, and also the cost of registrations for patents and copyrights being borne by the government themselves for the startups and so on. I see the ecosystem being favorably balanced both with policy and actionable steps that can be taken so as to draw in more investments. And the limits on FDIs on very many areas have already been lifted and taken to the upper limit of 100%. That attempt will continue so that there's more opening of avenues for investment in India.
Thank you.
We have time for last two questions, one each for Secretary Yellen and Honorable Minister. So first, the last question for Secretary Yellen. Ma'am, what do you expect from the Indo-Pacific Economic Framework, and how much do you think this framework will benefit trade and investment?
Well, this is a new framework, and the goal for us is to work with allies and partners to develop supply chains that are more resilient and predict and prevent disruptions. As I mentioned, it responds in part to all of the supply chain disruptions that we've seen in recent years. And we're engaging in trying to develop an active understanding of exactly what areas really require cooperation among our countries, what specific sectors present opportunities. We also, of course, in this framework, want to involve the private sector. They'll play a critical role. And we're very pleased that India has agreed to participate actively, especially in the supply chain part of the agreement.
Thank you. The last question I'm going to read out is on behalf of Mr. Ajay Shriram, Chairman and Senior Managing Director, DCM Shriram Limited. I was asked to read out. Okay. Please go ahead, sir. No, please, sir.
I'll make my answer brief, but you can ask a question. After all, if he's here.
Thank you. Thank you. Ma'am, wanted to know that considering the wonderful relationship we had with the United States, what can we do further to improve India's participation in the global supply chain, and how can we expedite that further going forward? Thank you.
I think that question was partly answered by
yes.
Secretary Yellen, in that we have joined the IPEF in 3 of the 4 pillars. And one of the critical pillars is on the supply chain issue. And other than that, I suppose whatever develops through the IPEF will happen and we'll happily engage. Also, this engagement with the US through this economic and financial framework that we've had a discussion today, I'm glad on the request of Secretary Yellen, we have agreed to monitor it every quarter. That's part of our statement today. So instead of meeting once in a year and also catching up with what is developed and then looking forward, quarterly there will be a committee of high level officers who will continuously monitor and see if everything is as per what was agreed upon, and if there's need, also move it with greater force and pressure, so that everything that is discussed gets implemented. So the engagement is only getting deepened. It's more outcome oriented. So you will see results of this engagement, which Secretary Yellen has spent the whole day with us on.
Thank you very much. Thank you, Secretary Yellen, Minister Sitharaman, for being with us today, for sharing your thoughts and also taking questions from our audience. Thanks also to all of you for your presence and for your active engagement in submitting your questions beforehand and in participating in the Q&A now. Now, with your permission, ma'ams, I would like to close the session. Thank you.